Welcome, G-Traders. You are watching a recap of the Asian session on June 27. Asian stock markets climbed in the morning following China's government assurances about robust economic expansion. On Monday, the US benchmark stock indexes closed in the red. Today, market sentiment slightly improved and the US stock futures rose. New Zealand shares followed suit. However, in Japan and Australia, stock indexes kicked off Tuesday with a decline. After a series of disappointing economic reports from China, top banks, including Goldman Sachs, slashed the country's GDP forecast for 2023. The S&P also expects China to log modest GDP growth. Such forecasts, as well as the sharply falling yuan in June, forced the Chinese authorities to take action. Today, Prime Minister Li Jian said that China's economic growth is expected to be relatively high in the second quarter compared to the prior year. Beijing pledged to boost domestic demand and provide access to more markets. The authorities are also trying to smooth out the recent drop in the yuan. To do this, the country's largest state-owned banks were selling dollars to buy yuan in the offshore spot market. In addition, the yuan firmed after the central bank said the daily fixing stronger than market expectations for the second day in a row. The monetary policy settings of China's central bank differ markedly from other regulators. Most of them raised rates in June or remained committed to further tightening to combat inflation. For example, the investors expect the Fed to hike its key rate by a quarter point in July. After that, it's harder to make predictions on the Fed's future steps. Jerome Powell said that 1 or 2 rate increases would probably be necessary. San Francisco Fed President Mary Daly suggested that 2 more rate hikes this year were a very reasonable projection. The tone of Christine Lagarde's recent comments was hawkish as well. She's making a speech at the Forum on the Central Banking in Portugal today. As a reminder, the ECB and the Bank of England raised interest rates in June. After rate hikes by top central banks, the US dollar had to retreat versus some of its rivals. In her speech, Christine Lagarde said that rates would be kept at restricted levels for as long as necessary. It helped the euro advance while the US dollar declined considerably. In the Asian session, the US dollar index was moving in the range of 102.5 and 102.80. In fact, the greenback has been falling for the second session in a row as the traders are still assessing the economic and monetary policy prospects. If a fresh US macro starts turned out to be weak, the US dollar could show a steeper decline. In the early morning, it was still trying to resume growth as a safe haven currency. However, it failed to win back yesterday's losses, hovering at 102.5. If the US dollar breaks through the resistance level of 102.3, it could approach the support level of 103.10. The greenback also gave to the yen. Initially, the yen advanced on the verbal interventions of Japan's policymakers. Vice Finance Minister for International Affairs Masato Kanda said that Japan would not rule out any options available to respond appropriately to extensive currency moves. Last year, the yen jumped above 145 after the Bank of Japan conducted several interventions on forex, and this is why traders took notice of his comments. On a Monday, Japanese Finance Minister Shunichi Suzuki stressed that he would closely watch currency market moves and respond appropriately if the moves become excessive. However, on a Tuesday morning, the yen lost its bullish momentum and rose to 143.70. Investors are used to loud statements from Japanese officials. Oftentimes, these are just words that rarely came into action. Policymakers can make plenty of obscure comments during the day, however they have little to do with reality. For this reason, a rapid rise facilitated by verbal interventions ended rather quickly. The dollar-yen pair entered the upward range of 143.20 and 143.70. The pair is affected by two opposite factors, which make the yen extremely volatile. Concerns about the global economic downturn are fueling demand for the yen as a safe haven asset. However, the Bank of Japan's ultra-low stance leads to a wider rate gap with the other central banks. The Australian dollar also rolled back after a short-lived rally. The Aussie was moving in the bullish channel of 0.6668 and 0.6723. Amid improved market sentiment following news from China. However, after Christine Lagarde's speech, it became clear that regulators could stick to aggressive tightening, and the risk of a global recession is still high. Therefore, the risk of sentiment prevailed in the morning, which led to a decline in the Australian dollar. At the end of the Asian session, it was trading at 0.6688. If it drops lower, it's likely to reach the support level of 0.6625. A breakout of this level will push the pair to 0.6600. If it resumes an upward movement, it will face a strong resistance level of 0.6730. If it settles above this level, the Australian dollar may recover to 0.6800. The New Zealand dollar kept growing moderately today. In the Asian trade, it was trying to touch the upper border of the range of 0.6150 and 0.6202, yet it failed and retreated to 0.6176. The kiwi has been climbing for the second session in a row. In the morning, it advanced amid internal factors and hawkish statements from the central bank. Finance Minister Grant Roberts announced on Tuesday the extension of the Reserve Bank of Australia's mandate. Given that inflation totaled 6.7% in the first quarter of 2023, interest rates may remain high for some time. The Reserve Bank of New Zealand will hold a meeting in 2 weeks, and the kiwi is likely to rise amid expectation of its hawkish decision. Today, the United States will unveil a batch of economic reports, including new home sales and durable goods orders. These reports are likely to impact the greenback's trajectory as well as the movements of other currencies. That's all for now. Hit the subscribe button and stay up to date with the latest market news. See you soon!